Investors, welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and we are here today for Friday's daily talk of stock. And what a boring way to finish out the week. The markets today were pretty flat overall. Not a lot of movement at all. As we could see by NVIDIA, it did not move by 1%. Apple didn't move by 1%. Google didn't move by 1%, and neither did Microsoft. So in general, yes, we do have both green and red in the markets today, as we could see by the heat map here, but really everything was flat. So if you are a long-term investor, not really too much going on today. If you are someone who likes the day trade, however, some pretty good opportunities, because we did start a lot more red in the morning, and then we did recover throughout the day. And with that, there was the inflation reports today, the PCE index reports, and well, there was both positive and negatives from these reports, because the positive is the PCE index did meet Wall Street's expectations. So right exactly what Wall Street was expecting. So that is a positive, no shockwave there. But the negative, inflation is rising once again. We are seeing the highest levels since February, back at 2.9%. And we do have some tariff concerns back on the table, because Trump went to Truth Social last night and he talked all about these tariffs that he is looking to impose. So a 25% tariff on all heavy trucks made in other countries. He also talked about a 50% tariff on all kitchen cabinets, bathroom vanities, and associated products. This is all starting October 1st. Also, he talked about pharmaceutical products. Once again, he came after the head of the Federal Reserve, Jerome Powell. He said that great numbers came out today on the economy and the success we are having, but our interest rates are too high. If it weren't for Jerome Too Late Powell, we would be at 2% right now and in the process of balancing our budget. And that is the main concerns with the market right now, is what the Federal Reserve is doing and what they are going to do at this next meeting. There is an 87% chance that they do cut, but still a 12% chance that we do get a pause. So in the short term, this is causing some fear, uncertainty, and doubt. This is kind of why we have seen the small bear in the larger bull market that we are in. Myself, I am not at all concerned. I do believe that the Federal Reserve will cut at this next meeting, and the movements that we are seeing in the markets right now are very small, are very knee-jerk to what we are seeing data-wise, but in general, the Federal Reserve has already shown their hand, and they will cut more this year. We are expecting more rate cuts this year. I think it would be silly if we don't get a rate cut in October. Anything could happen, and if we don't get that rate cut, we will still get that rate cut in November. So in general, I do believe that we will continue on the trend that we have been seeing in the markets, which is overall very bullish. So the bears have been very loud, all the negative bears about the market, but also our favorite bear, who is sitting in the background back there, he has been pretty loud in a good way. So the first stock that we are going to be covering today is Big Bear AI. As always, this is not financial advice, just merely my opinion. But in the short term, Big Bear has seen some crazy momentum. There was a big jump up in the Big Bear. It bounced off that 200-day moving average, but the trading sessions in the market this last week have been pretty bearish, and the Big Bear did get hit with that bearish sentiment, like all stocks. But what is positive with Big Bear, that tap off the 200-day moving average brought us all the way back to the near highest level of resistance that we saw in the consolidation period that we were at right around the earnings. And so Big Bear is seeing a lot of momentum right now, a lot of volume, and Big Bear did get rejected at this highest level, but that is all right, because at that same time we were a bit overvalued on the relative strength index, and we did push up quite a bit on the MACD. So things are coming back down to an adjusted period, and we recently saw this little bit of a gap here. So I do believe that we could once again fill this gap, and in general, I do believe that Big Bear may continue to sit in this level of consolidation until we get another big catalyst with Big Bear. But that is okay, because with Big Bear sitting at just a price of $6.71, I am long on the Big Bear. So I do hold shares for the future in Big Bear. I also have a lot of options contracts, a lot of leaps, and in general, anytime you see a great company that is under the double-digit mark, if this company does explode, you could see some serious exponential return on investment. And all that is within this recipe of Big Bear does present that we could see a big price in Big Bear in the future. So myself seeing this opportunity at just $6, I am very excited. And when we look at the fundamentals of Big Bear, this company right now has a market cap at just $2.65 billion. And so it could go a lot further. When we started covering Big Bear in 2024, this company still had a market cap under $1 billion. So a lot of investors have jumped into the Big Bear this year, and the price sitting at $6.69 is a positive with the massive short interest that we have on Big Bear at 21%. So just the other day, we saw this big move within Big Bear when they did announce their new contract, and a lot of bullish investors stepped in. You better bet that this made some of those shorts pretty nervous. And with an elevated short interest, this is where things could really get crazy if Big Bear continues this turnaround story that they have been on. Because with Big Bear's history, we have talked about it many times, they haven't had the cleanest history. They have historically had a lot of debt and a lot of problems at Big Bear. But this last year, there has been some big changes, a new CEO. They have also picked up a lot of government contracts. They are at all these airports, and also at their last earnings report, Big Bear did announce their strongest balance sheet ever with a record ending cash balance of $391 million. So as we could see by the chart here, blue represents the cash and black is the debt. Big Bear has historically been under a lot of debt, but in the recent quarters, they have paid down that debt, and now they have a lot of cash on their balance sheet. And this is amazing because anytime you are under a lot of debt, this causes a lot of stress. This could bring a lot of restrictions. You know, cost to borrow is a lot higher, but Big Bear has greatly improved that. And then if we are talking about the cost of borrowing, if they do have to borrow more, well, their debt is lower and interest rates are going to be getting better with this bigger quantitative easing cycle that we are going into. So everything is looking positive for Big Bear, for the company within. When we talk about the macros, things are looking positive there also. And for them to get their strongest balance sheet in their history, for them to get their most cash, of course, there had to be a little bit of dilution along the way, but Big Bear still does not have a crazy amount of shares outstanding, just 370 million. I've seen companies with billions of shares outstanding, and they did do a little bit of dilution, but this was just to bring up their funding. And many times dilution can be a negative, but also a positive. It is a negative if you see a company dilute while it is already losing value in stock price, but it is a positive if that company has a lot of momentum and a lot more investors want to hop in. And that is exactly what I see with the Big Bear. So this year has still been a bit of a struggle with Big Bear. When we talk about the actual stock price, we did have the highest level in February. We did drop back down, but we are elevating, and we could get back to that 52-week high. What we want to see with Big Bear is for it to break past this level of resistance. Now, in the long term, I do believe that the markets will continue to push up, but let's just say that the mini bear continues. I think at the worst, we will see Big Bear drop right below $6, right back to this level of support where there was this gap 2 times. It could fill that gap once again, and worst case scenario, it drops to that 200-day moving average. But best case scenario in Big Bear, if Big Bear does break past this level of resistance, I could see Big Bear getting all the way back to $10, and in the long term getting to 15 and above. So with Big Bear, the reason why I cover this play is because there's a lot of true intrinsic value within this company. And when we talk about asymmetrical return with very little risk, that is what I see within this play. Sitting at a price under $10, I am willing to pay for this company while it is still cheap, because I do believe in the future. Just this last year, Big Bear again has picked up all these contracts. They are working at all these airports, and they have gone international also. And so with Big Bear, I am very excited. I have made a lot of money with this company this year. My strategy, as I've talked about many times, is to play with options contracts. So while Big Bear has been beat down when it was down here, I purchased into options contracts and I sold some of those on the rip up. And then also I purchased more options contracts when we were down here, and even more when we hit that 200-day moving average. And these are leaps on Big Bear because options contracts provide an amazing amount of leverage. So I actually made a video not long ago on Big Bear AI and options contracts. If you've never checked that out, click the card above, because there's a lot of useful information in that if you don't understand options contracts, or if you just want to see my strategy that I am using for Big Bear to make hundreds of percent points on the Big Bear and these movements. So there's that opportunity. If you don't want to dive into options contracts, or you still think they are too risky, well, you also have this opportunity to get a bag in Big Bear with the play of BAIG. This is BAIG, and this is Big Bear double leverage. So every 1% that Big Bear rises, so does BAIG, and every 1% that Big Bear drops, so does BAIG. But I love these double leveraged opportunities because they provide a lot of exponential return on investment. And again, I am playing with Big Bear for the long term. So I am investing into 2026, into 2027, and beyond. But in the short term, I am also making a lot of profits with these options contracts and by playing with BAIG. It is an absolute blessing to have these double leveraged opportunities. And while the markets are going crazy, do not miss the chance to play with some of these plays, because the way I look at double leveraged, let's just say you're putting $1,000 into a play. Let's say you're putting $1,000 into Big Bear AI currently. You need Big Bear AI to double to see your 1,000 become 2,000. But if you are in BAIG, you just need to see Big Bear go up by 50% to see your money double. So if you put in 1,000, it'll become 2,000 off that 50% movement. But if you want to lower your risk, you could always go half of that with just 500, essentially meaning that yes, you are double leveraged, but it's kind of like putting 500 into the underlying Big Bear AI instead of the 1,000, reducing your risk, but still being able to take advantage of those gains within the Big Bear. So Big Bear, I am very excited about this company. He is a favorite on this channel, and with Big Bear, I think it is only a matter of time until we get to that $10 range and beyond. We just first have to break through that level of resistance, which sits right around $8.50. I do think we could bounce around for some time, but let's see what we see with the Big Bear. If the price goes up, I'm happy, I'm making money. And if it goes down, I'm taking that opportunity to continue to increase in my longs with Big Bear. Now, with that being said, we're going to talk about our next stock, which is HIMS and HERS Health. And despite today being a bit of a boring flat day within the markets, HIMS and HERS Health was actually one of the top performing stocks within my portfolio, HIMS and Tesla. And with HIMS and HERS Health, we recently also tapped off that 200-day moving average, which is also aligned with this rising level of support and resistance that we have been seeing within HIMS and HERS Health. So I do believe that the momentum will continue within HIMS and HERS. I do believe that in the near term, we should tap right back to $60 here pretty soon. And with HIMS and HERS Health, just like we were talking about Big Bear and their short interest, it is even larger with HIMS and HERS Health. So Big Bear has a short interest of 20%, which is very, very high, right? Anytime you have double-digit short interest, that is very high. But HIMS and HERS Health has a short interest of 32%. And this is just what is reported. This doesn't even include dark pool data. So to see a short interest of 32% is mind-blowing to me. And this company right here should not be shorted as heavy as it is. But I believe that a lot of institutional investors and firms put their shorts on Big Bear or on HIMS, because HIMS is a retail favorite, but it is a favorite for a good reason, because HIMS and HERS Health, this company is a tremendous company and they have an accelerating earnings. So every single quarter is getting better. They are also a company that operates at a net positive, and in general, HIMS and HERS Health is a great company when it comes to branding. You always see them be talked about by YouTubers. They are always promoting all these podcasts. So they have a lot of money that they spend on advertising, but it is helping to grow the name of HIMS and HERS Health. They have a lot of useful products. And in general, HIMS and HERS Health, I believe, is just being attacked by the shorts. There has been some lawsuits against HIMS and HERS Health, and also the FDA went after HIMS and HERS Health. But again, this company has a 32% short interest. So when you see these events on Wall Street, when you see these companies get sued, when lawsuits go against them, it is not uncommon. We see this all the time within the markets. I mean, earlier this year, we even saw a lawsuit against QBTS, which is a quantum computing company, and the allegation was that they weren't really using quantum computers. I mean, this is ridiculous. And anytime there is short interest against a company, many of these other companies or firms will go after these companies to try to slander them and bring them down. Because you got to remember, what you see on Wall Street is usually driven by interest. So if a company or a firm is talking great of a company, that means they want it to do well, meaning that they probably have shares within that company. They have an incentive for it to go up, and quite the opposite. If they want to see something go down, many times it is because they have puts or because they are shorting the stock. It isn't always this way, but just something to always think about in the lens of the way Wall Street operates. Because myself, I'm just a small investor, but of course, even I talk about things that I want to see go up because I am in these plays and opportunities. So I am in HIMS and I am in Big Bear AI. So just something to always think about. You know, always do your own due diligence. Always go out there with an open mind, because anybody could push a certain narrative. The bulls are paid to promote positivity, and the bears are paid to promote negativity. But, you know, we could always just go out there with a clear sense of mind. And what I say, you know, I try not to lean too much either way. I try to just give my honest opinion, and I try to look for great opportunities when they are undervalued. And I try to always keep a sense of my own opinion with me. But as investors, all we could focus on is being professional risk takers, being professional speculators. So we're trying to make our best bets when speculation aligns correctly. And then on the opposite side, we need to also be professional risk managers. We need to always professionally manage our risk, which is the even bigger part of the entire scenario. But in general, just when we talk about managing risk reward, all that, and the bigger picture, I do believe that we are going into a much larger quantitative easing cycle. The Fed recently cut rates. They will again here soon. And I do believe that the upwards bullish momentum in the markets will continue. Really, the only reason why markets started to go down this week was because Jerome Powell spoke, and some investors did not like what he said. But overall, things are looking very positive right now. When it comes to inflation, yes, it is a little bit high. Interest rates, things are looking positive there. And then when we talk about the tariffs, well, I'll say what I have said all year long, and that is that the tariffs are never as bad as many investors expect. So each round of tariffs have caused some fear, uncertainty, and doubt. But with the tariffs, all we have seen is more revenue come to the United States, and expectations not meet reality for the bears, because they thought the price of everything was going to skyrocket and the tariffs were going to ruin the economy, which we haven't seen. So I am still remaining very bullish on the stock market. I think that October and the rest of the year is going to be massive, but I would be curious to hear what everyone else thinks in the comment section below. I always love to hear from you guys. So please drop a comment. Please let me know. Please let me know what you think. Please let me know if you are in any of these plays or anything else. Also, please leave a like. Please subscribe to the channel. And if you you enjoy the daily talk of stock that I do, if you like these daily updates, also hit the notifications bell and hit all notifications, because YouTube's algorithm has changed a little bit. So in general, they aren't really recommending videos to subscribers as much unless you have that notifications bell clicked. Thank you guys so much, and I will see you in the next video. You all have a great weekend.